Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's April 3rd. This will be our chart lesson for the day, and this is Thursday, so this wraps up our lessons for the week. No chart lessons on Fridays. I've been thinking it was Wednesday all day, and I didn't realize it was Thursday until I looked at my calendar to refresh my memory on what the date is. I don't know where this week went, but I've been super busy this week, and so went by pretty quickly. Um, let's get to the chart lesson. You can see we opened up. It looked like we were going to have a range day, but we just went lower. So we do have more than a measured move here. It looks like now. Sometimes you can kind of ignore some of those stems when you're looking for the measured move, and that puts us close. We do look like we're trading higher at the moment. It's just now 5 o'clock. The market just opened. I mean, we were severely oversold, so a bounce is not out of the question. But have we quite met the target? I don't know. Even if you fudge it down to the where we opened here, I guess that would be the close. It still doesn't quite get you there. We're close, but I'm guessing that we're probably overdone on the measured move. But we may be looking at this target here. There's some support. If you come back, that was where we had the low from the sell-off back in August. So we could be coming back to retest that. That's a distinct possibility, and if we do test that and bounce, we'd get a third test there. It's a lot of gap in there, so I don't know if I would necessarily trust that as a triple test unless we really got rejection there. But we may not even get there. We may go higher from here. It's hard to say because this market, it did not like Trump's tariffs, obviously. I think it spooked the market. It scares people. I think any way you look at it, there probably is going to be some short-term um, pain. Even in the long run, it helps us. There's going to be some short-term pain, and the market just doesn't like it. And so it could mean some, cutting back for a lot of these companies because their costs are going to go up considerably, I'm sure, because they're not going to get the cheap overseas labor anymore. And I think in the long run that's a good thing because it's going to bring. I saw already where both Apple and I think it was Nvidia, both of them were already. One of them was going to spend uh, I believe $1 billion. One of them was going to spend like $4 billion on moving factories back to America. So that's good in the long run because that's going to create jobs. They're going to have construction to build all that stuff, and then once they get it built, they're going to have to hire employees, and so that's good for America overall. Well, short term, we're probably going to have some pain. So that's probably what the market's building in, this short term pain. Market's always usually way ahead of the game, and all this stuff is usually built in. So we may be overdone at this point. It's just hard to say, but just be ready for anything to happen. We could continue lower, we may go up, but there it is on the daily chart, very bearish. It was mostly sideways, but we turned down at the end. It looked like it was going to hold the range support, but it did not hold. But let's flip over to the 2000 tick chart and take a look at it and take a look at the trades, and we'll get through this day and we'll wrap it up. Okay, here's our 2000 tick chart. You can see that we kind of gap down, and we never could fill that gap, so the market's going to try to fill that soon, I'm sure, as well. But you can see we were working sideways. We broke out and failed. Most breakouts fail, even if only temporarily, and you see we broke out again and it failed temporarily. But this is what you want to see. You want to see it act as resistance consistently and then turn down again, and then you can start getting short again. But here you see you might have had a chance to get short in there, but if you did, it's dangerous, and you would have, it ends up going higher. You're expecting it to come back, and so you got to be real careful how you trade it. Notice that we had this first move down, and then we had this correction, and then we started lower again, and we almost had a perfect measured move once again. So nice two legs down really today is what we had. Of course, we spent sideways choppy for most of the day. Even this stuff trending higher here is real mixed and choppy. But there's clearly some patterns here that you can trade and follow, and makes it a little easier for you. So, but let's zoom in. We'll go through the trades. There's a couple of news items today. We had a 7:30 unemployment claim, which you had to mark that out. And then we had a 9 p.m. Or 9 a.m. PMI news, and you had to be kind of short on that. I'm sorry, flat on that as well. So because of that 7:30 stuff, there's really nothing. There was a nice second entry here, but the problem is it was by that time it was like 7:16, so you're right in that news area. You might have fudged that one. If you did, I wouldn't fault you too much because that bar closes at, let's see when that bar closes. I think these are the close times, 7:16. So you're just like a minute in there, but you want to be flat by 7:30. So even if you do take this trade, actually it doesn't make the high right there. So that's your, there's so much stem there. And there's still a lot of stem right there. I don't know if I'd take that trade or not, to be honest with you. I mean, I'll tell you, I didn't like it in real time, so I'm not even going to mark it. I'd leave it alone because you get a clear second entry here, and you're in the clear, well past the news, and there's a nice second entry right there. That's a great entry. Clearly two legs back, a lower high from here, so you get two legs. Attempted two legs down. This one came up short. It just takes off. You don't really get a chance to enter that. And you get a second entry here, but the signal bar is no good. Notice, let me zoom in here a little bit more, make this a little easier for you to see. Notice the new high here, and you pull back. First entry, and you pull back. So a break above that's a second entry, but that's mostly sideways. Not a very good setup at all. Then we have a trend working down, close outside new low. This is like there's a close outside and a new low all in one here, but that's like a first entry, second entry, third entry. So I wouldn't take that, and you can see it does end up pushing lower. And I think you need a higher low here, and you get one, but it's just not a very good setup either. But then you get a nice second entry short here. Excuse me, it's that time of year. The pine trees are dropping all the yellow pollen, and it drives me insane. I have throat problems this time of year every year, so just bear with me. Doesn't bother me too much until I get to talking a lot. When I get to talking, my throat gets scratchy. So I may have to pause it occasionally to clear my throat. But anyway, clearly two legs up. You got to trend up, close outside, new high, and turns down, second entry short. I think you have to wait for this to close. And it actually doesn't break lower on this bar, but I still think that's okay. If it breaks lower there, I think you're okay to go short there. I like that one. That was really the first really good, well, besides this one, that was the first really good setup that was decent that we had. And if this would have been a full bar, I'd say take that on the engulfing bar, but it wasn't. So I think you had to wait for this to close. And if you didn't take it because of that inside bar, that's fine. I mean, you could argue for this to be green, really, but I liked it. And because it's a lower high than this one as well. Takes off. But then you get another second entry short here. Notice the new low, first entry, second entry, and it's closing right inside that trend line. There's plenty of room to get out. I like that one as well. These are all first entries. You do get a low and a higher low here, and you might take this higher low to back higher, but sometimes you get another leg down, and so it could easily tick up. If we hadn't went all the way to the EMA here, I'd mark that blue. But because of the way it is, you could still argue for it. But I'd probably just sit tight and wait. You're coming into the news hour here as well, so you got to be flat. But notice clearly you get two legs up, and you wouldn't have had a good signal bar there anyway, so it doesn't matter. And by the time you take a trade, we're back down here. I did mark this green. Notice that you make a lower low here, but there's clearly two legs back to the trend line and the EMA. and you get a bearish bar. If you recognize that 2 legs back, even though it's not a true second entry by the way we do the counts, those kind of trades generally, um, I like them. So maybe you take that one, maybe you don't. I marked it green just so I'd remember to talk about it. If you took that, I wouldn't be too upset with you. I'd tell you that was probably a good trade. I liked it in real time. So um, here we get a first entry, second entry, and then you get a close outside, and we tried to go higher twice. So you really try to go higher 3 times there. Now it's not a second entry, but it's a triple test, and it's a little congested. But because it's a triple test in a downtrend, and we've had a pretty good down, we had this spiking channel down, we're going to probably retest these lows. So I like that one. If it wasn't a triple test, I'd say no. But with a triple test too, I think you have to take that trade. And then we do get a break lower. That signal bar is too neutral. There's a second entry short right there, but you don't want to go short right here because most breakouts fail, and this thing is not taking off. And next thing you know, you got a second entry long here. Notice that new swing high is slightly higher than that one, so you get a first entry, second entry, and we try to go lower 3 times. So you probably got some shorts trapped if it breaks higher, and you can see how it rockets up real fast. That's telling you that you trap some shorts here, and people are exiting, but probably people that were getting short all the way down here are probably taking profits and exiting, and you can see it rocket up. So I like that one. Because it made a slightly lower low, I think that you have to make that green because you need a higher low to be sure that the downtrend's over. And most likely the breakout's going to fail, but it could go another leg or two down before it fails. So you just never know. But anyway, I like that one. It's a little aggressive, but I like it because those often, and I'll show you some in a minute, when a lot of times these are important lows or highs for the day. And if you can catch one, I mean, you can, and you usually catch a runner. You probably catch a runner on that one right there. These failed breakouts often catch good runners. And sometimes they just take off and run and run and run. And you can make 8, 10, 15, 20, 25. Lately, you might make 100 points depending on how you manage your runner. So it's crazy that we've had moves like that lately, but we have. So, but anyway, you got a new low there, and you run up and you get a close outside first entry, and you break higher. You get a second entry short. It does make a higher high on a breakout here, but it closes back inside. So I still like that. Just treating it like a regular second entry. Just go short right there, and you could actually argue there's at least a triple test there. It doesn't get anything but a scalp, but then you get your lower high here. Definitely take that one. Again, it doesn't get anything but a scalp, and it runs up here and breaks out again, and you're still a ways away from the EMA, so you probably need a lower high here to go short again. But if you want to be aggressive, there it is, and you can see it turns out to be a nice trade. It's one of those failed breakouts again. So honestly, by the time this one closed, you might have even moved this up because you're still catching all those breakouts. And then this is the failed breakout. So that's how I would probably look at that one. And it is a second entry. You got that new low. Technically, it's not because you get a slightly higher low here. But that looks like a leg up, a two-legged correction, and another leg up. So I'm going to treat that like 2 legs up. You can clearly look at it and see it looks like 2 legs up. And it just takes off. So you probably catch another runner here maybe. And that's just a first entry, and then there's a second entry there, and then that's just a first entry. That signal bar is no good anyway. Just a first entry, and then you're chopping sideways here again. Now, I didn't mark this trade. Notice you're working up. You do get a close outside the new high all in one bar, but you don't really have, actually you might have had your resistance right across there now. So you might argue there's a triple test that closed inside still. I later moved it up. But if you saw that, you might take that trade. I'd say it should at least be marked green. But I was looking for a second entry and not necessarily playing that as a range. But I think you could. I think you could argue that this could, because if you look at this like that, you don't have this higher piece here. And you can see that looks pretty doggone close. So I think you could argue for that to be a triple test range trade. And you're better off for the lower high, which you never get, and then you're bouncing down here. You can't go long there because there's not room to get out. But then you get a triple test here. That signal bar is close. I don't know if you can argue. I mean, it maybe it closes in its upper third. It's close, so maybe you take it, and of course it works. And then you get the failed breakout. So maybe you take it because I just told you sometimes you catch these failed breakouts. Um, Even if you don't catch the final one, usually you're going to get a scalp if you're when you're that far away from the EMA. And you can see that was an easy. I think there's 3 or 4 points there. I can't remember exactly. Let's just look real quick. So yeah, there's 3.5, almost 4 points there. So there's plenty of room to get out, and you see it goes right to the highs again. And actually, I probably would have had this moved up by now. And you can see that fits the midline much better there. It didn't quite get there, but it's still you'd have got your scalp. I don't think you want to short that now because it didn't quite get there yet, and there's not enough room there really anyway. You're looking to we've had to close outside, and you've already got a new low, so if we make another new low, it may take off. But anyway, I like taking both of those. Both of them are risky because this one not as much as this one. This one is close to. If it wasn't for the signal bar, I'd make that red. This one closes outside. That's going to be green, even if you had a perfect signal bar, as long as it doesn't close back inside. And then we get another low here, but the signal bar is no good. But then suddenly you get that higher low. Take that trade, and you can see what happens. This is what I'm talking about. You catch these, and you could ride this all the way up here. Depending on how you play it and how conservative you are with your runner or whatever, it depends on how much you got out of it. But technically, you could have ridden it all the way up to the highs, and it just depends. So, but there it is. And then we run up here, and most likely you're probably going to exit in here. But that's still a nice runner. Don't get me wrong. Even if you exit right in here, there's almost 20 points there on one runner. If you're like me and you trade 5 runners, usually you get 5 runners, you might have made 80 to 100 points there on a nice runner. That erases a lot of losers. Even when you're trading 20 contracts, that erases a few losers. So it's important to try to get runners, and people we go back and forth on that because some people just, if you're not hitting 80 or 90%, you're probably not going to want to trade runners. You probably shouldn't be trading live yet though either. And that's the issue. It becomes a double-edged sword because if you're just trading doubles, and every time, a lot of your runners are going to get stopped out. So if you're just trading doubles, 2 contracts, and you get one runner, or I'm sorry, you get one scalp, and then your runner gets stopped at break even or break even plus 1, well, you're only winning 4 or 5 ticks each time. But when you take a loser with 2 contracts, you're getting 8 or probably more than 8 because the signal bars are so big. So the math's not going to work for you. So if you can only trade 2 or 3 contracts, I really think you should just scalp for now. If you can get to 80 or 90%, even 70%, you probably can scalp and make money. But until you can at least do maybe 5 contracts where you're scalping out 4 and only saving 1 for a runner, then that one runner doesn't kill you. It's not much difference between scalping out with 4 and having one of your runners go out at break even and then losing with 5 contracts as it is if you're losing 1 for 1 by only trading 2. So anyway, I hope that's clear. But notice we come up here and it looks like we're going to get back inside, and we come back and we get a 1, 2, 3 triple test. That's also a second entry. I'd count this as a double top. I don't think you can count that as a second entry right there. It's just a double bottom. But notice this double top. So it's a new high first entry, and it turns down again. It breaks lower and fails and turns up. You could trade that on the engulfing bar. You really couldn't go long any other way because if you wait to go long here, then you get an inside bar, and I think that's makes it too iffy, so you can't go long there. So the only way you could enter that would be on the engulfing bar, but I like it that way. And then we get back in the range and we pull back and we test the range low again and get, notice this is a double bottom, so it's like a reversal pattern. And this would be where you'd be expecting one at the bottom of the range. And off it goes. So another nice trade. And then we get a close outside here. There's a second entry long there, but if you're following the rules, the signal bar is no good, so you don't. That probably would have worked anyway, but you're still in the range, no signal bar, so you got to wait for the break and the new low. And what happens? You test the low range again, and you get a bar that's only 12 ticks. That's pretty good when the volatility is really high, and that really looks like 2 legs down. There's 2 legs in the first leg, which you'll see that sometimes, and then a correction and another leg down, but it's still 2 legs down. If you measure, it's like 2 perfect measured legs down. You can't get any better than that, really. So that's a second entry. If you went to a larger chart, that's a second entry. That's why this stuff works on every level. Because if you go to a bigger chart, you probably just see 2 legs down. And that's why sometimes a hidden second entry like this one right here, it looks like there's 1 leg up there. And here I didn't mark this because we're doing the retest. But it's 2 leg, it's 1 leg up, correction, second leg up, and there's a second entry short there. It just looks like 1 leg on this one though. And this signal bar is no good, of course. But if you took a second entry there with a good signal bar, it still would have been a winner. But it looks like we're starting to get into an uptrend here, so you got to be careful about going short anymore. Somebody asked me about a couple of trades yesterday that were like that were probably good setups, but they were counter trend trading because the trend had kind of reversed or whatever. And that was the reason I didn't like some of those trades. Either the signal bar wasn't good or whatever. You're kind of going against the grain by looking for shorts now because we're in an uptrend. This is 2 legs back, but no decent signal bar. Now you might say, hey, there's a triple test, but even then, signal bar is no good. Too congested, but you get your close outside, 2 legs up, and it turns down. There's no. Take that back. There is. It's possible you might say, well, couldn't I go short there with a break and 2 legs? And you could. You're better off to wait on the lower high there because sometimes it'll get you. It's timing. But you can see there's still enough room there. It would have worked. So, yeah, you could probably take that. I'd wait on the lower high, and that's why I didn't mark that one. But you could still take that. You might lose on them sometimes, but, 9 times out of 10 they're going to work. And because that's really a double bottom, you can count that as a second entry. That's just a first entry. And then you get your close outside and the new low, and you get a higher low here, but that's your signal bar and it doesn't qualify. And you might say, okay, well, I want to go along here on this second entry. The second entry really triggered here, and this was an engulfing bar. So you're better off to skip it, but you might could go long right there too. I mean, it would have worked. You'd had to ride this pullback back, but as long as you put your stop where it goes, it works. And that's just the first entry, no close outside the new high. The lower high is too far down. You're not looking for a reversal or failure here, and then you get stuck in another range. But notice we got a little spike in channel working down here, and you get a 1, 2, 3. And it's also a first entry, second entry with a great signal bar. So I like going short there. And then of course you got a triple test, 1, 2, 3 here, and this closes back inside. There is a good bit of stem there, but I think it closes in the upper 1/3, so you could go along there. It doesn't take off, but it's still good for a scalp. You can see it got 2.5 points, so it got 8, 10 ticks, more than enough. Even if those of you that think you should go for 8 ticks would have got out, but there's a couple of them you wouldn't have got out, and that's the reason I don't like going for 8 ticks. But anyway, we bounce down here and you get a 1, 2, 3 triple test, and there's not a new high there, but it still kind of looks like 2 legs back. But the triple test is all you need of the support there, and being that far away from the EMA, maybe you take that. It looks a little congested, so I did mark it green, but maybe you take that and you see it would have worked. And you get a close outside new high here, no setup, no lower high, no nothing like that. And you just kind of have to watch it come down. And then we're bouncing around again down here. And now you got a break and a new low. And when you get a triple test here, 1, 2, 3, and a good signal bar go long. Now again, it didn't work out, but you get a scalp out of it if you're playing by the rules. I mean, even if you're going for 8 ticks and breaking the rules, you get a scalp there. You get another 10 ticks. And then it turns and you get the little failed breakout. I talk about these all the time. Sometimes they're important lows, and this is the kind of place you find them. That far away from the EMA, maybe you take that. You're better off to wait on the higher low, which you don't get an opportunity for that because the signal bar is no good. It breaks out up here and you get stuck in this range, but I don't see any entries I would be willing to risk on this. Nothing. And it finally breaks out. And actually, I take that back. This was a failed breakout, way away from the EMA again. When you've been going sideways, it's going to probably pull back and test it. And you got plenty of room there, so maybe you take that one. Again, it's aggressive. And you see it gets almost 5 points. So it works. You can't go short there. Now you got another new low, and then you're just chopping sideways again. But once again, you got a 1, 2, 3 triple test. You also got a first entry, second entry, bearish bar, go short right there. And you might have got a runner on this depending on how you played it. You should have got a runner on it most likely. And you could have. Again, you don't have to exit a runner at 230. You can take it, just don't, exit at some point. Don't let it take all your money back. But as long as it continues to trend down, you could stay with it. I don't know if I would have ridden this back. I think that would be not worth it. So you should have exited somewhere down here. Anyway, I would have drawn my trend channel. And when I got a good signal bar outside that got a break above it, like right here, that's where I would have exited. So you can still see a runner would have got you 12 points right there. And if you were the type that wants to try to get a long-term runner and you wanted to ride that whole pullback, I mean, it would have stopped you out at break even if you kept it at break even, so it's not worth letting it come all the way back. But that's what they do. They come back and they look for more people that wanted to enter there and give them another chance, and they run all the stops of the people that are trying to get a runner like that. I mean, this market's very efficient. The ES is super efficient. And the smart traders and the market makers, they all know where all these stops and stuff are at. And so they're trying to run them at all times. But anyway, that takes you into 230, and that's the end of the day there. So pretty nice trading day, even though it's not what I would call the best trading day. And there's probably another trend down through. I didn't look for one because we were playing the range here, but if you draw this, you can see there's probably another channel here. And if you drew that and we're paying attention to it, you probably think, but I think you got a break here that's probably convincing. You can see right there, and then you trade it down. But I believe that the range was the dominant pattern until later in the day when we started the second leg down. So and there may be a bigger pattern here as well. I don't think you really needed it, but I mean that looks like it right there probably. But I believe if you just played the ones I marked out here, you're fine. So. And that's the thing. There's trends within trends. There's ranges within trends. There's trends within ranges. There's ranges within trends, and it all meshes together, and that's why it works at every level. This price action works exact same on every level. It gets harder like when you get to the daily chart because here you can get 4 or 5 bars in a few minutes, and so you get a better, quicker feel for what's going on. But when you're on the daily chart, things move real slowly, and you might need 4 or 5 more bars before you really know what's going on, and that takes 4 or 5 more days. Now, if you get any higher than that, like a weekly chart, then you got to wait 4 or 5 weeks, and or whatever. Once you get much above, um, you start thinking about time base. Anything much above 4 hours, and you got to start sitting and waiting for days. Where here, you're only waiting a few minutes to get confirmation on a trend channel a lot of times, or a range, or whatever. So, um, 2,000 tick tends to be the sweet point, and it gets fast sometimes when the volatility cranks up, and then when the volatility slows down, then everybody feels like it's watching paint dry. So because of that, people want to start dickering around with their 2,000 tick chart and making it, when it's faster, maybe making it 3,000 or 4,000, and when it's slower, maybe making it 1,500 or 1,000. And I used to think that was probably not a bad idea, but over time, I found that just stick with the 2,000 tick chart and learn to trade it no matter what's going on, because you can and you will, but it takes experience, and so you just need to stick with one size chart, which I think 2,000 is about right. It may be a little fast right now, but if you can't trade it, then you probably don't need to be trading live. Just stick to one size chart and become an expert at that chart, no matter how fast the market is or how slow the market is. That's my opinion. And that's why I don't change anything anymore. I just stick with what I do, the same thing every day. And I've done the same thing every day for years, and it works over and over and over and over. It doesn't matter what happens to the market, how fast it gets or how slow it gets, it works. It works. You still find the setups. If you follow the rules and you don't try to fudge the rules or rewrite the rules, and that's the thing, people always want to change something. And sometimes it's personality driven. I get it, but the key is we've already tried anything you can think of. And we've got this down to, we know what works, and we've got it down to a science. So why try to reinvent? It's like trying to reinvent the wheel. You just can't do it. It's already been invented. We've already got it. You're just wasting your time, and you're costing yourself time and hard work and trying to do something we've already tried to do. I guarantee you, anything you can think of, we've tried the 8 ticks or the 10 ticks or the 5 ticks or the 6 ticks, and we've tried to go lower. Somebody says, why don't you, if it's so easy to get 4, why not just get 1 or 2? Well, you'll have a lot of winning trades with 1 or 2, but it only takes one loser to wipe all those 1 or 2s out. It's kind of difficult to do it with 4 ticks for most people, but once you get pretty good at this, you'll find out if you just go for 4 ticks, your winning rate is, and if you can read that chart, your winning rate's going to be, people are going to say you can't have a winning rate that high, and I've shown you over and over you can. Don't listen. That's the thing. Don't listen to the other people. That's the main thing, is don't listen to the naysayers, because they can't do it because they don't know how to read the chart. And if you're trying to trade a indicator or a pattern or trying to swing trade, and you're going to have a lot of losers. And if you do that, you've got to have a risk reward ratio for your stop size and your profit target. All that stuff is true, but those people are all losing traders. We're only trying to get 4 ticks, and I've explained this before. When you've only got to get 4 ticks and the bar's 20 or 30 ticks when it's real volatile, what are the odds that it's going to go 4? If you're reading the chart right, those odds are stacked in your favor that they're going to go 4 ticks in your direction before they go 15 or 20 in the other direction, or sometimes more. But if you're not reading the chart right and you're not understanding what prices are doing and where they're trying to go, or you misread it, yeah, you're probably going to take a hit. But that's why you shouldn't be trading live until you're very skilled at this, because you'll be surprised how much easier it is when you understand the price movements and understand what prices are doing and can figure out where prices are going. Yeah, certainly this morning when prices are coming down, I don't know that they're going to end up down here. But in the short run, I can figure out where they're going by these trend lines and knowing the rules just enough to get 4 ticks here and there. That's all you need. That's all it takes. Anything more is just the longer you stay in the market or the more times you enter the market, the more risk you're taking on and the bigger chance you got for losses. But when you can, as retail traders, understand this: we have to have a razor thin margin of error because we don't have the deep pockets. If we're wrong, these experts and big funds and banks, if they get long right in here trying to pick a bottom and it turns and comes down here for a little bit, that doesn't kill them. They can ride that out to their right. They got deep enough pockets. They can be wrong for a while. Me and you, we can't be wrong more than a few minutes, a few seconds in many cases. Otherwise, because we don't have those deep pockets. So we have to be really good chart readers. You'd be surprised. Most of these fund managers and fund traders, they don't even know how to trade. All they know is they're trend traders. They know how to pick the trend and try to get on with the trend and take a ride on the trend. And if they're wrong for a little bit, their pockets are deep enough. They just have to get it right in the longer term, and that's not that hard. You can go to that daily chart and do this, but you don't have the funds to do that, especially not in the futures where the leverage is super high. You could have $1 million and probably not have enough funds to do that, to ride out some of these moves because you'll go bankrupt. So we have to have a razor thin margin error, but you can do it, and it's possible. It just takes a lot of work and time and becoming an expert. It's a skill. Don't let anybody tell you that chart reading is not a skill. Some people can do this skill and some people can't. And it just takes a while. Most people just give up. Most people have unrealistic expectations, and they come in here thinking they're going to get rich, and they're going to read a book or a manual, and they see us. We do these trade examples, and they see my students do them. And they think, well, I can do that. I can read a book and understand it and do that pretty quick. But it doesn't work like that. You got to do this for a while, and you've got to hone that skill set. Just like thinking you're going to walk in and play professional baseball tomorrow, even if you got good baseball skills. It's the 9th inning. There's 2 outs, and you think you're going to walk in out of the stands and get in the batter's box, and what are the odds of you getting a hit and winning the game for that team that's down 1 run with bases loaded and 2 outs, and the odds of you getting a hit are probably nil. But if you got to go practice with those pitchers every day and you worked on it and honed your skill, you might accidentally get in there and get that winning hit. All it takes is a 1-base hit, lob one over second base or hit one up the middle between 2 players. There's a lot of, or hit a home run for that matter. Maybe you got the power to do that, but you probably couldn't do it without honing that skill. You couldn't just walk out of the stands and do that. And this is here, you can't just get up out of the public and sit down and beat all these professionals because they're skilled at it. They've been doing it for years, and they know what to look for, and they know what prices do. They understand how prices move, and you're going to have a hard time beating them until you can do that too. This is a zero-sum game. For you to make $1, somebody has to lose $1. And that's why 10% of the traders that understand and can read this chart and can understand price movements and can get the winning trades, they end up with all the money. Everybody else is a donor. Don't be a donor. It goes back to my old comment I used to make. Don't be a donator. You don't want to donate to the market because it's not fun. So don't trade. And the way you do that is you don't trade live until you're good enough to beat them. So don't be a donor. Be that guy that is smart enough to stick to the sim until he proves he can do it there first. And I don't mean just, and you can't trick yourself or fool yourself. When you start, you can only trade 2 contracts. Well, you got to do it you got to get on the simulator and double a 10,000K a sim account, trading just like you will when you get live. You can't double down. You got to start with the same amount of money that you would if you were trading live. You can start with 2,500. Well, your account's got to start at 2,500. And you can't double down, and you can't add on, and you can't hold on, break the rules, and get lucky a few times, because you won't get lucky when you're trading live. I promise you. The pressure and the stress will get to you, and you'll make a mistake much quicker than if it was play money. But there's nothing. I mean, when I first started, you had to order charts, and they were a month old before you ever got them to even look at them. That's what we had to work with back in the day, and that wasn't that long ago. Trust me. I mean, I'm older than probably many of you listening, but I'm not that old. I mean, I don't have to roll in here in a wheelchair yet, um, so I'm not that old. Um, but now with the simulator and trading, you're trading the exact same live data on the simulator that you would if you were trading live. So there's no difference really, other than your money's not real. And yeah, that makes a slight difference, but the odd opportunity to learn like that is, people don't realize how lucky they are today and how much easier that is. So anyway, I've talked enough. I'm going to wrap this up. This is Mac. Hope you have a great weekend. I'll see you Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and I'll see you next time.